Good afternoon, and welcome to the Applied DNA Sciences fourth quarter and fiscal year 2022 financial results conference call. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star, then 1 on your telephone keypad. To withdraw your question, please press star, then 2. Please note, this event is being recorded. I would now like to turn the conference over to Sanjay Hurry, Investor Relations for Applied DNA. Please go ahead.
Thank you, Gary. Good afternoon, everyone, and welcome to Applied DNA's conference call to discuss our fourth quarter and fiscal year 2022 financial results. You can access the press release that was issued after market close today, as well as a slide presentation accompanying this call on the Investor Relations section of our corporate website. Speaking on the call today are Dr. James Hayward, our Chairman, President, and CEO, and Beth Jansen, our CFO. Judy Mara, our COO, and Clay Saroff, our Chief Legal Officer and Head of Business Development, will also be available to answer questions on the Q&A portion of the call. Before we begin, please note that some of the information you will hear today during our discussion may consist of forward-looking statements. I refer you to slide 2 of the presentation and to a Form 10-K filed a short while ago for important risk factors that could cause the company's actual performance and results to differ materially from those expressed or implied in any forward-looking statements. We undertake no obligation to update or revise any forward-looking statements or any other information provided on this call as a result of new information or future results or developments. I also want to inform you that Jim and Clay will be in San Francisco next month at an off-site event to the annual J.P. Morgan Healthcare Conference to meet with institutional investors and business development partners. If you'd like to meet with them, please contact me to schedule. You'll find my contact information on the bottom of today's earnings press release. Now it's my pleasure to introduce our first speaker on today's call, Beth Jansen. Please go ahead, Beth.
Thank you, Sanjay. Good afternoon, everyone, and thank you for joining us on our fiscal year-end call. I will start this afternoon with an overview of our results for the quarter ended September 30th, 2022. I will then turn the call over to Dr. James Hayward, our President and CEO, who will discuss progress against our strategic initiatives. We will then open the line for questions from our analysts and institutional investors. Before my review, I would like to note that effective with the filing of our 2022 Form 10-K today, we are reporting segment data that reflects the results of operations for our 3 reportable segments, which are comprised of therapeutic DNA production, which is identified as LineaRx, our majority-owned biotherapeutic subsidiary, MDX, or molecular diagnostic testing services and products, which is our ADCL clinical laboratory, and DNA tagging and security products, which is our supply chain traceability segment. Given the recent substantial growth in our clinical laboratory business, as well as the evolution of our LineaRx subsidiary, the tools and processes put in place over the course of the fiscal year will enable the executive management team to manage the company's performance on a segment basis, assess expected future cash flows, and make more informed decisions about each of our 3 business segments going forward. To begin, we are pleased to report continued quarterly, year-over-year revenue growth for the fiscal fourth quarter, as well as record revenues for the second consecutive fiscal year. Our revenue performance across both periods was driven by ADCL and its COVID-19 testing service, and due primarily to the addition of a key testing client just prior to the start of this fiscal year. Operationally, we moved to optimize our cost structure and manage our expenses. A key component of our cost management program was to reduce the cost associated with our key COVID-19 testing contract. We are continuously monitoring and right-sizing our costs relative to this contract that has been extended through July of 2023. Turning to our consolidated results for the quarter, total revenue was $3.6 million, an increase of 17% from $3 million in the prior fiscal period, reflecting a $1.3 million increase in ADCL COVID-19 testing revenues associated with our key client that offset a decline in product and service revenues from other businesses totaling $782,000. The decline primarily reflects a decrease in sales of DNA concentrate to protect a textile supply chain, as well as a decline in sales of our MDX test kits and supplies. Gross profit was $417,000, or 12%, compared to $992,000, or 33% in the prior fiscal period. The decline in gross margin was primarily the result of a higher portion of clinical laboratory service revenues coming from managed services testing contracts that carry higher costs compared to ADCL's surveillance contracts. To a lesser extent, the decline was due to a change in product sales mix, as product revenues in the prior fiscal year period included sales of diagnostic test kits and supplies and DNA concentrate for textiles that are at a higher gross margin. Total operating expenses were $4.8 million compared to $5.5 million in the prior fiscal year period, reflecting the absence of a $822,000 impairment charge related to goodwill and the remaining net book value of intangible assets incurred in the prior fiscal year period that was associated with our 2015 Vandalia asset purchase, and to a lesser extent, a decrease in research and development expenses of $313,000. These decreases were offset by increases in insurance expense of approximately $209,000 and in bad debt expense of approximately $237,000 to reserve a customer balance that was deemed to be uncollectible. Our operating loss was $4.4 million compared to $4.5 million in the prior fiscal year period. Excluding non-cash expenses, adjusted EBITDA remained relatively flat at a negative $3.4 million compared to a negative $3.3 million in the prior fiscal year period. Turning to our balance sheet, cash and cash equivalents totaled $15.2 million on September 30th. Cash and cash equivalents include proceeds from an August public offering of common stock and 2 series of warrants for total net proceeds of $10.7 million, as well as a subsequent warrant conversion for an additional net proceeds of $3.7 million. Accounts receivable stood at $3.1 million, the majority of which has since been collected. For fiscal 22, our average monthly cash burn stood at $786,000, representing a 41% reduction from fiscal 21's average monthly burn of $1.3 million, and is reflective of increased cash receipts as well as our cost management efforts. Our warrant balance increased as a result of the recent public offering. Our outstanding warrant balance on September 30th stood at $7.3 million. Approximately 2.2 million warrants have exercise prices ranging from $2.80 to $2.84 per warrant share. That would represent total proceeds of $6.2 million to the company if exercised. The balance, or 5.1 million warrants, have an exercise price of $4 per warrant share, of which 2.1 million warrants expire in September 2023. I would like to note that also effective with the filing of the 10-K, we have alleviated the substantial doubt of a going concern on the company through the cash received from the August public offering and the warrant exercise, as well as collection of our accounts receivable. We estimate that we will have sufficient cash and cash equivalents to fund operations for the next 12 months from the filing of our 10-K today. Cash and cash equivalents were $14.7 million on November 30th. Additionally, we identified a material weakness in our internal controls over financial reporting as part of the annual audit. The material weakness is non-operational, and it did not require restatement of any previously issued financial statements. The identified material weakness is related to controls around accounting for complex financial instruments as it relates to the accounting for our outstanding warrants and the related tax impact. We are committed to maintaining a strong internal control environment and are implementing procedures to help ensure this material weakness is remediated as soon as possible. Capital expenditures are projected to be less than $3 million, the bulk of which will be focused on development activities to support our 2 near-term go-to-market applications for LineaRx's linear DNA platform that Jim will address in his remarks. In parallel, we are pursuing non-dilutive funding sources, including grants, that may offset or supplement our projected spend. This concludes my prepared remarks. Thank you for joining us today. I hope you all have a happy and healthy holiday and New Year. I will now turn the call over to Jim for his comments.
Okay, thank you, Beth. And good afternoon, everyone. Thank you for joining us on our fourth quarter and year-end fiscal 2022 investor call. It was a strong year for Applied DNA, both from the perspective of revenue growth and of operational execution. In fiscal 2022, our strategic priorities were, first, to maintain momentum in revenue after a record fiscal 2021. Second, to advance our pivot to biotherapeutics, which we recognize as having the greatest opportunity to build long-term value for our shareholders. And third, to evolve our DNA tagging and clinical lab segments toward positive cash flows to support the value-creating potential of LineaRx, our biotherapeutic segment. To that end, the fourth quarter capped off a consecutive second year of record revenues in which we also recorded 4 consecutive quarters of year-over-year revenue growth. While our revenue performance was once again generated from COVID-19 testing, what is most impressive is that these record revenues were achieved while concurrently putting into place the potential drivers of continued growth beyond COVID-19. And I'll initially focus on our clinical lab, ADCL. As Beth noted, consolidated revenues were driven by ADCL and the acquisition of a key COVID-19 testing customer just prior to the start of the fiscal year. Since the contract began, we have continuously aligned our operational model and costs with the fluctuating testing demand over the academic year. We continue to proactively manage costs to demand following the receipt of a 1-year extension to our contract through July of 2023.